Oh. What's up? Yes. What's up? Good morning, everyone. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. I'm going to be honest with you, I overslept this morning. So what we're going to end up doing a quick short on all of the pairs. I'm going to show you how quick you can be able to evaluate the market and see if you want to be able to trade this morning and be able to go from there. So I'm going to go through the disclaimer, and I'm going to end up giving myself basically 15 minutes to be able to get this done. So let me show you how you can be able to get it done in less than 15 minutes. I'm not a CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education you can be able to make your own informed decision about what you want to be able to do for Forex trading. Understand that Forex involves risk. That involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind, and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, showing myself on the screen, hopefully everybody's doing very well. You can see me on YouTube. This is Trade with Travis on YouTube. I didn't even change the date. To be honest, once again, I have to update all of this stuff. So once again, I'm going to end up putting 15 minutes on the clock, and then after that, going from there just to be able to make sure everything is right. So let's go through and let's take a look at it very quickly. See if there's any opportunity. More than likely, I truly believe that there's not, because I ended up overviewing it last night, but we'll take a look at it. So today's a trader's day. We look at what's going on with the US dollar. We see that durable goods and non-defense capital orders are going to end up coming in. I don't think that's going to end up moving the market, even though it is a high impact news. So quite frankly, not necessarily worried about that. Every other pair, New Zealand dollar, Eurozone, everything else like that, is not going to end up having any news trying to push it. So you should see that either the market's going to start to retrace very quickly, or we should see a continuing move of the US dollar trying to complete this overall de-extension, which is that 12,124. So here we go. US dollar index, we look at it, the market is in the no trade zone. The market is close to being oversold. I'm not looking at buying at this particular point in time unless I end up getting a low price. I'm actually hoping that we actually end up selling off going into Sunday and going into Monday, and then on the 2 hours of some trades, being able to get a trade to where we can be able to buy it up to the top side. If we can be able to get that, then I'm interested in being able to trade it. If not, then quite frankly, I'm not interested in trading it until it actually ends up completing the de-extension and starting to retrace. Smart money means that I would rather wait until the market falls back or comes back and gives me an opportunity to be able to trade it. We take a look at oil. We can see that this market is going through a ABCD sequence. It broke the counter trend line to the downside. Currently, right now, the market is in the sell zone, but we're starting to have a little bit of stagnation. I will look at the 2 hour and try to see if we have any movement on the 2 hour. If we have a counter trend line break that we can be able to play off of, then I would take the trade. The only thing that I don't like about this is that this market just broke a 2 hour A. With the market breaking the 2 hour A, there's no fib that I can be able to work off of when being able to trade. I don't care if there is a counter trend line break at this point in time. There's really no retracement and movement to that point to where I can say I'm good at being able to trade on this at this particular point. So US oil is out when it comes down to trading it. We take a look at what's going on with gold. If we look at what's happening with gold, we can see that this market is still going through this 2 hour swing, broke through this triangle, went to the downside. The market is expected to fall down to 17,031. Overall, we can see that the market is in the buy zone. We do not sell in the buy zone, no time ever. So what I'm doing is I'm waiting for a retracement, give it a couple days towards upside movement, and be able to go from there. If it keeps on moving, then it's going to move without me, and it's not going to take my money with it. So we're pretty much done on that pair. You take a look at what's going on with the currency strength meter. You've never heard about this. Basically what it does is it calculates all the movement for all of the currencies and kind of gives you an idea about what's happening with the market. Currently right now, we can see that all of the markets are pretty much jumbled up right around the 6.5 area. Not necessarily the greatest type of movement. It just means that no one is really kind of actively trading it. The market kind of pushed up for the New Zealand dollar and for the Australian dollar as expected, and the US dollar was weak for a certain point, and since then the US dollar has gotten strong and then kind of died off. So all that means is that people are looking at being able to get into the New Zealand dollar and Australian dollar for the retracement of those moves, and then after that trying to see if they can be able to make a few pips off of those moves. So we're going to pay attention to those, and then after that take a look at some of the other pairs real quick. Once again, we're trying to get this done in 15 minutes or less. So Based off of the daily, this market has went through this ABCD swing earlier this week. We end up catching this move right here at 73.32. Now, once again, I end up having that little rant. If we would have stayed in this trade all the way through, it would have been 276 pips. 276 pips based off of the trade that I ended up taking would have been $2,700 based on the movement. I did not catch the move right here. We caught the move all the way to the halfway point, and then after that did not trade it down. That's on me, gang, so I do apologize about that. If you stayed in the trade, then quite frankly, then you would have been very good on this overall trade to the downside, but currently I didn't. So that's my fault when it comes down to that. So waiting for a little bit of a retracement. We have to have 2 days of bullish movement to go up. We probably may see some on Sunday, probably may see a little bit on Monday. Trying to see how the rest of this day is going to end up going. I hope that this market does not keep on breaking down to the daily point of control at 68.85. Once again, that would be devastating because I want the market to be able to bounce back up. Take a look at the U.S. Canadian dollar. U.S. Canadian dollar at this particular point has hit a D extension, has broke above 1.3336. As expected on this move, the market is in the sell zone as well. Remember, we do not buy in the sell zone. So waiting for a counter trend line break to the downside to be able to get back in on this overall market. If we do get that, that means that the market is going to end up selling off, and we end up having a top side move right here towards this break and being able to see if we can be able to get into that. If that does happen, then quite frankly, we have a trade to take once the market basically starts to retrace back and give us a low price so we can be able to go after 1.3580. We will not trade this until it actually ends up dropping down. So we do need a low price for that to be able to happen. So U.S. Canadian dollar, I'm not looking at buying it. Doesn't make any sense to be able to do so. We go to the U.S. Swiss franc. U.S. Swiss franc tried to scalp this market yesterday, and I wasn't patient enough to be able to allow the market to be able to move. The low price on that one was 92.37. And while I was trading it at, quite frankly, I was trying to scalp the market and trying to be very judicious about my money. I guess that's the best way to be able to say it. And I didn't allow the market to be able to move my way. I got it off of this counter trend line break when it started moving up here. Had this huge, bearish dark cloud cover candlestick that I did not get into, and I did not play it from there. So the market is moving without me. The extension is 93.13. I do expect that this market is probably going to end up going up and completing this overall D extension. There's really no room for it. There's really no reason for it not to, at least today. If there's any pair that I would look at being able to trade, it would probably be this one. But once again, it is clearly in the sell zone. So for the people that are trading this one, these are people that actually ended up getting into this trade a long time ago, and it's allowing the market to be able to move towards that position. Did not hold on my position. We got in at the 91 area. Think about this. We got in right here at these lows. And once again, this is the reason why I'm kicking myself on some of the trades. That is 122 pips. 122 pips at $10 a pip is $1,200. So quite frankly, I left some money off on the table. So waiting for the next move to be able to happen. We can be able to get back into it on that one. Euro United States dollar. We take a look at this movement. We can see that this market has broken the trend line. It's about 40 pips away from this overall movement. This would be the only pair that I would look at for a scalp in the market. It's 37 pips away. Quite frankly, the only thing that I'm looking at when it comes down to trading would probably end up being that move. It ended up getting up to 1.1680. Since then, it ended up breaking. I turned off my automated systems as well, so I'm not going to trade this one as well. Market is there. If it hits 37 pips, then that's great. And then there's nothing I can be able to do off of this move. We're looking for the retracement going into next week and being able to see if we can be able to have a move from there. Last pair that we're going to end up paying attention to will end up being the New Zealand dollar. We take a look at what's going on with the New Zealand dollar for this move. We can see the New Zealand dollar Japanese yen is starting to push up based off of the daily. We're looking to see what's happening with the movement right here off of this movement. So a couple things. One, this pair, the New Zealand dollar was the last pair to be able to have that break, but did not retest. So currently right now, the biggest push that I think we're going to end up getting going into next week will probably end up being the New Zealand dollar. The reason being is because this will be the prove it portion of it. So this will be that state of transition for the New Zealand dollar. Now it made this beautiful M move. If you look at it, we end up having this double top that end up happening right here. where the market ended up going up to this top, found resistance right around 6,800, went back up, broke down to 6,800 again, and then bam, slam right back down. So the next thing that we're looking for is we want to see if this market can be able to match up with this area right around the 6,700 area. I would probably place a pending sale right around the 6,700 area. If you could be able to get it somewhere around there, we can see that overall that movement has been at that particular point a couple times, where 6,700 has been proven to be a major resistance level. So we end up, if we can catch it somewhere around there, at this particular point, I think that'll be a good price to be able to get into. That'll turn past resistance in the future support. Past support in the future resistance, and be able to go from there. So going into next week, if we can get that trade to the downside, then I think that'll be a good solid trade to be able to get into for the downside movement. Because right now we don't even have a Fibonacci that we can be able to trade off of when it comes down to that. Now, that's it. Ended up getting through it, and I got through it in 11 minutes. Once again, the reason why we do this, the reason why I'm doing this, one, is because that I ended up doing it late. So I do apologize about that. But if you like shorts like this and the way that we end up getting this done, type in the comment section, type in the likes, and say say that you liked it. Maybe we might end up doing the 5-minute time frame like this. Not the 5-minute time frame. Maybe we might end up doing a 5 o'clock and a 6 o'clock time like this, being able to do quick overviews. We have done that before. Typically, we do like to be able to trade and give recap videos right around this time. And if you're interested in being able to learn about that, then you can go from there. But always got to talk about this. Remember, Monday is going to be the start of our Forex Bootcamp. Make sure that you end up hopping into our 5-day Forex Bootcamp. It's going to go from September 28th to October 2nd. It's going to end up being 5 days, all next week from 9 to 10 p.m. Basically going an hour each day, and you're going to end up learning a lot of different things throughout the overall time. Each day is going to be broken down into a new topic, and from that new topic, we're going to get you to a point to where you're going to be a very profitable, hopefully profitable. We're going to end up getting you into a very confident trading position, so you can be able to learn and be able to react on how the market is going to end up giving you trading opportunities, kind of like what ended up happening this week. And you can understand why, you can understand and evaluate why I'm a little bit upset on how I end up trading on Wednesday, or the lack of trading on Wednesday, to be able to get ourselves into a position to where we're pushing our account. Now, we've reached new highs when it comes down to our overall account size. We reached new highs when it came down to our students' account sizes. But we have to keep on pushing a little bit harder. We're doing this as a team, and quite frankly, I hope that you're going to end up doing it with us. So, like always, plan your trade your plan. I see each and every one of y'all going into Monday morning, and we'll look for more trading opportunities. Take it easy.